that. Well, let's take the discussion forward. Shibani Sircar, Kurian, Senior EVP and Head Equity Research at Kotak Mahindra AMC joins us on the show. Hi, Shibani. Always good to see you on the show. Well, let's get straight. Instead of talking about the headline index, let's talk about the mid caps and the small caps. Big run out there on a day-to-day basis. Yes, we have this joke out here about compounding. You miss one day, maybe you miss 0.5% on the index itself, and stocks, they're doing 5, 10, 15%. Do you think things are getting overheated out there?
Hi, Nigel. Always a pleasure to be on your show as well. So when you look at the mid cap and the small cap segments, clearly we've had a stellar rally over the last few months. And if you look at today, where valuations stand, where mid caps and small caps vis-a-vis large caps are concerned, valuations are clearly looking stretched. So if you look at various parameters on valuations, mid and small caps, we believe, are now getting into territory where even on their own relative history, valuations are looking on the upper side. And therefore, at this point in time, while structurally, if you have a view of mid and small caps over the next 4 to 5 year period, yes, one should be looking at mid caps. Near term, however, this is going to be a market incrementally where one should be careful in terms of the kind of stocks that one invests in. So bottom-up stock picking is likely to become even more important. Focus on companies with strong balance sheets and cash flows and companies with low leverage, because at this point in time, our belief is that versus large caps, mid and small cap valuations are looking stretched. And therefore, this would be a time to be somewhat cautious in the near term where mid and small caps are concerned, especially in terms of the kind of stocks that you pick for the portfolio.
Shibani, hi, afternoon, Prashant here. But, you know, I take that last point, which is that relative to large caps, they've probably become, the gap is closed, right? But what you said earlier, that relative to their own valuation. So I, about a week ago, looked at mid-cap index valuations relative to its own past. So I looked at 3 points. So right now, 1 year forward, Nifty mid-cap index P multiple is about 23.5 times, right? The last time we made a significant high on the mid-cap index was October 2021. Back then, P multiple was 33.5. This is all Bloomberg consensus. 33.5. We're at 23.5 now. And the very significant top which was made in the mid-cap index before that, before October 2021, was January of 2008, after which there was a long slump. Back then, the valuation was 24.5. So, and these are high points, right? I mean, these are meaningful tops for the index. And so, I mean, yeah, prices have run up, but is it looking crazy expensive?
Yeah, so, you know, what I take your point that, you know, there would be certain points where valuations would have been higher than what we are trading today. But when I'm talking about valuations, I'm looking at an average over the last 10 to 15 year period. So when you look at valuations for both mid-cap index as well as small cap index over the last 10, 15 year average, 1 year forward price to earnings, currently we are above long-term averages. So that's number one. The second is, how do you gauge greed and fear in the market? And when you start looking at participation vis-a-vis large caps and mid caps, we are coming to a point where markets are possibly getting into that greed zone, where incremental participation is moving more and more towards mid and small caps, of course aided by flows, as well as the fact that earnings delivery has improved over the last few years. So what we are really saying is, if you look at incrementally, and valuations between the 3 segments of mid, large and small. Valuations, while on the large cap, valuations are not cheap either. However, large cap valuations on a relative basis seem to be better placed. And even within mid caps, there are still pockets of opportunity. It's not that the entire mid cap segment is overvalued or overheated. However, one should be incrementally cautious in terms of the kind of stocks that go into the portfolio while mid and small caps are concerned.
Shibani, you know, what about this entire risk about the rural economy slowing down further because of what we've seen on the back of a monsoon deficiency in the month of August, the fears that September is also going to be fairly weak? We were hoping the rural economy starts picking up, the distress eases, but do you think that this throws a spanner in the work? And is there in any way we need to alter one's portfolio to account for this scenario?
Yeah, so the monsoons going into deficiency in the month of August has been a drag where the rural sentiment goes. And, you know, incrementally, just before August, we were starting to see signs of improvement, especially where the rural economy and demand goes. And even in terms of real rural wages had been moving up. However, we still have to wait and watch. While August as a month has seen deficiency in rainfall, remember the entire rural income is not only agri income. There are a significant part of the rural income which comes from infrastructure related activities, and therefore the infra segment has been improving, and therefore the rural wages which comes or is linked to the infra activity has been fairly stable and buoyant. So that's number one. And the second is, while monsoons have been deficient, we have to see what is the impact of it in terms of the overall Kharif output, and therefore in terms of the agri related wages as well. So it's still wait and watch. While you're right that at this point in time, the bottom of the pyramid demand has not revived in a big way. Demand continues to be largely more premium, and that's what we are seeing across segments. But I would not write off the entire rural recovery as yet.
Okay, that's on the rural piece. Shibani, hi, good afternoon, Surabhi here. Yesterday the newsroom was abuzz because suddenly all these chemical company stocks were up and about. Even some of them, even today, we're seeing some excitement over here. But I guess the logical question is it just some, bulk chemicals in China which are seeing a little bit of an uptick in prices, or is this indeed the first sign that the cycle itself is bottoming out? I don't know if you've applied yourself to this as of now, too early. What thoughts on the sector overall?
So if you look at the price movement that we are talking about and the recent uptick that we have seen, possibly some of that recent uptick is because of capacity shutdowns in China, and that has resulted in the near-term price movement. But if you just take a step back and think about chemicals, what has happened over the last year has been two factors. One, global demand has slowed down, and that has impacted the sector. And secondly, there has been inventory destocking plus dumping from China, which has resulted in prices getting impacted. But when you look at different segments and pockets of the chemical sector as such, what we believe is that the growth outlook in terms of the specialty chemicals basket remains fairly strong. The sector continues to be a beneficiary where the China plus one strategy is concerned, and therefore any incremental market share gains for India should translate into growth, especially where specialty chemicals goes. And therefore we believe that possibly in the second half of the year, or maybe closer to Q3, Q4, you should see some of that demand come back, especially on the specialty chemicals side. Also, a lot of companies within the space have invested in capacities, and therefore that shows that there is a long-term runway for demand which is still intact. So overall within the chemicals basket, we have been fairly constructive on the specialty chemical space, and that continues at this point.
Okay, Shibani, we'll leave the conversation here for now. Thank you very much for joining in. Enjoy the rest of your day. We'll get into a break. On the other side, we'll tell you what Dealing Rooms is saying in our segment D Street Chatter, and we'll also get you a few technical trading calls.